I'm Jim Jubak, and welcome to my video for today. The topic is 6 months to the market top. This hat is a call out to my friend Liz Weston, who works at NerdWallet. This is the Everett, Washington AquaSox, one of the great, as far as I'm concerned, minor league logos, extant. You can find more of my stuff, posts, profiles, portfolios, etc. on my free site, jubakpicks.com, or on my paid site, jubakam.com. And you find links to both of those below the video. Also, if you want to subscribe to this, my YouTube channel, that'll get you notification whenever a new video goes up. Please do that. If you like today's video, I'd like it if you would like the video. Hit that button. Okay, 6 months to a market top. What do I mean by that? Well, if you look at Friday, I see all the signs of a kind of blowout top. It's not just the fact that the S&P and the NASDAQ continue to hit new all-time highs. It's a question of what kind of action you got in individual stocks. The first one I want to look at is a thing called Pershing Square Tontine Holdings. This is an SPAC. In other words, it's a blind pool. They haven't yet decided what they're going to invest in, but they're raising money with the idea that they will acquire a company. Basically, this is all being done on the reputation of the investor who heads up this, which is Bill Ackman, who has a great reputation in the hedge fund world. But you notice the way this thing has gone parabolic. It's still just a blind pool. There's nothing. We don't know what they're going to invest in, but on Ackman and the idea that they'll acquire something has gone from down here to way up there. Okay, and this stock was up about 7.24% on Friday alone. Or to take another stock, what else have I got up here? Let's take a look at, this is a chip stock. It's a European-based chip stock. They make chips for automobiles, things like that. It's called Infineon. And again, you notice that this is a great upward curve. Look what happened on Friday. This is not, this is a real company with real earnings, real prospects, real track record, but it was up 5.8%. This is the kind of jumps you get when a market is getting ready to top out. And we got other things like that. Another SPAC, again, one that is riding on the reputation of the owners. This is of the originators. This is Goldman Sachs' second SPAC. Goldman Sachs, which was GSAH, was up 3.45. Again, there's nothing here except for the fact that they've got a reputation and people are expecting them to do something. A recent AI IPO, C3.ai. Symbol AI was up 7.5% on Friday. Sunrun, which is a solar panel installation and company, up about 6.14 on Friday. This is the kind of stuff you get when you're looking for a market top. You get a kind of blowout of the stuff. Tesla is a great example of the kind of stock that should be going up right here, and it was up 7.84% on Friday. What you notice during the week, however, and what's really important, is that bad news was this market pretty much ignored all bad news. We had a really dismal report of December jobs on Friday, where the economy actually lost about 150,000 jobs when people expected that they were going to add a minuscule 50,000 jobs. The unemployment rate stayed steady at 6.7%, but this was bad news. Didn't budge the market. We had, first of all, a slight uptick on the ideas that with Democratic control of the Senate, we were going to get a big stimulus package from Biden. News on Thursday that West Virginia Senator Joe Manchin, a key Democratic vote, because they only have 50 votes, they need all 50 plus one from the vice president-elect or vice president then. Was not going to support the bill, so disappointment. But again, it didn't do a big disappointment. We had, of course, the armed invasion of the U.S. Capitol. Again, it didn't really budge the market. The one thing that put a little bit of worry in stocks was news that from a number of Fed members speaking that the Fed was thinking about maybe starting to sometimes, not so soon, but sometime within 2021, to reduce the number of Treasury and corporate bonds that they buy each month. Right now, they're running at about $120 billion worth of purchases. That's money that is going into the financial markets from the Fed. And the Fed is getting it essentially by having Treasury run the printing presses. Yet a number of people say, well, 120 billion is a whole lot. So maybe we'll think about cutting that down. The market said, oh no. And then the market got the good news, which is the bad news on Friday. The bad news, of course, was the slump in the employment market. The good news, of course, is that people say, rightfully, the Fed is not going to do anything to reduce the money they're pouring into the market unless we can see the economy recovering. So the idea is the economy was looking bad, puts off the Fed change in policy. What that really does is that it indicates that the Fed is the key here. And as long as the Fed is pumping money into the economy through bond purchases, as long as it is keeping interest rates down near the bottom where they are at 0 to 0.25 for their benchmark rate, that really isn't anything to sort of disrupt this market. We're getting a decent news sometime on the vaccine rollout, and eventually we'll get gradual kind of herd immunity sometime in 2021 or 2022. The market likes the prospect of that. You're going to get a stimulus package. The economy is going to indeed start to recover. All those things say, hey, we don't need to pull money out of this market as long as the Fed is supporting it. And I think that we're not going to see anything from the Fed for maybe 6 months. So we're at a top, I think. Tops, however, take a long time to develop. So this one could last for a while up here. And it will continue to show signs that well, maybe we're at excessive valuations, but no one's really looking at that. As long as the Fed is there, the market will stay up here. So I'd say we've got 6 months to play at this level of a top before we need to worry about a big drop. If I can find, this is a chart for the VIX. This is the Chicago Board of Options Exchange Volatility Index. It tracks volatility. It tracks the amount of money going into hedges for the S&P. So the more money going into hedges, the higher the VIX goes. The more money going into hedges, the more risk that people are worried about. So the VIX goes up when the markets are feeling like there's danger of risk. Goes down when not. If you can see on the chart, this peak right here is from March 9th, when the VIX was up near, oh God, what are we talking about? We're talking about somewhere around 65 to 80, depending on what the close was. The VIX, a normal VIX is like 17 to 18. This is the height of the coronavirus restrictions collapsing the economy when fear ran rampant. You can see what's happened since then is that we've had a steady decline in the VIX, a couple of spikes, but we're still headed lower and lower and lower. So that on Friday, the VIX fell another 3.6% down to 2156. We're getting very close to what I'd call it normal, which is around 17 or 18. As long as the VIX keeps moving down, it's an indication that people aren't, well, I'm not sure would say complacent, but they're really not worried about it. When we get to 17 or 18 on the VIX, again, normal, I would start to say, hey, that might be a time when you could use some kind of options play on the VIX or some other surrogate for the VIX to go, hey, from here, volatility looks like it's only going to go up, worry is only going to go up, but we're not there yet. We're still headed downward. And I think that as long as this pattern keeps going on, I wouldn't necessarily short this market or try to put a put on. But I certainly watch the Fed to see what they say. And the key thing there is looking at when the Fed might start to do something that would indicate that they think the economy is strong enough to take some money out of the big cash flow going into it. This has been Jim Jubak For my YouTube channel, today's video is called 6 Months to a Market Top. If you want to subscribe to this video, this channel, please do so. That'll make sure that you get notifications when a new video goes up. If you like today's video, please, like it. That would be appreciated. You can also find more of my stuff on jubakpicks.com, my free site, and even more stuff, more portfolios, more stock picks, a few options plays on my subscription site, jubakam.com.